Good day, traders. This is Rich with some price action on the U.S. markets. We're coming down to the last 5 minutes of the trading day. It's 3:55, just about 3:54. We'll see one more candle develop as I'm discussing this, and the SPY is moving up to new highs right now. Overall, the markets are moving up to new highs. I really think there's some positive momentum here, but I am not going to count out a fade of this rally over the last few days just yet. I think a lot of people are getting squeezed out a little bit, and we're seeing a nice push. We dropped really fast, really far, and prices are coming back into where the alignment, we should say, of a situation we're in. I think there's still terrible news to come out that we haven't seen. We had jobless claims and all these other things coming about today. Markets are just shrugging off everything. It's Wall Street making its move. It's day traders making their move. Hedge funds making their moves. The average investor doesn't really know what's happening with their portfolio. So we're just going to focus on the stocks we looked at today. We looked at a few. We had a couple opening trade potential setups. And after going through it later on this afternoon, I missed out on a couple great ones based on the models I usually go after. The other day we talked about imperial gaps. And then yesterday we had a gap trade on a particular trade that I got halted on, which was a pain in the butt. But I got over that pretty quick because of the call option I had later that afternoon on the SPXS. Today was the day not to take the SPXS at the end of the day, because you can see as this last candle is forming, we jumped from 257 on the SPY to 263, which is a significant move. I think we might get to 280, and then we see a reversal back down. Do we have to test the lows? It's questionable if we test the lows. Again, down here at 218.26, I really think we need to do it just to flush everything out and start over and build it back up. We can't go up as fast as we went down. This is going to take time. It's not just going to happen. We're not going to be at 330 next week. Now, we might be there by the summer, or we might be there by April sometime. It depends on everything that's happening, and we can't control that. So we're just going to trade what we see, and that's the key. Trade the price action that's in front of us, and we find good setups, and that's the goal. So here's the SPY. We've seen it moving up all day. It pulled back a little bit and just kind of chopped around once it made its first initial move in the morning. And now we have this nice strong candle to the north side, which is a pretty strong move with a lot of volume. You check out most stocks like Exxon. It's made a couple candle moves here from 37.8 to 38.90. So, it's not getting to the highs of the day, but it's definitely making some moves up. Something like Amazon, it's doing the same thing, making new highs for the day after, moving up about 62 points today. So we're seeing some interesting moves across the board. But the trade we looked at today was on our chart, our watch list. We saw a gap. Not a huge gap, but just volume. It was basically a little bit of volume with a little bit of gap, and it was Aflac, good old Aflac. It was one of those trades where it gapped up a little bit, closed yesterday at 36.70, we'll call it. The close was 36.73, and it opened at 37.20. So a little bit up, maybe about 1%. Gap. What we did see here is we saw the move up, then a couple consolidation candles. Not an inside bar or anything, but just a consolidation here of two bars with a lot of positive momentum. SPY was moving up, and we decided to jump in at, it was around 39.31, I believe. Wrote it up here, got out around, didn't take this, probably didn't get all the way up here at 41.22. I believe it was like 40. Yeah, it was 40.85, I believe, down here. I think it was on this candle, actually. 40.80, 40.85. Maybe it just opened this one. It dropped. Once it pulled back, I got a little suspect of it. And then it launched back up, and then eventually just pulled all the way back down for the rest of the day. But the setup was there. You can see it in front of you. We had a nice move up, a little bit of a gap, good volume. You can see the volume down here. It's getting the volume now, moving back up. Not sure why they were getting so much play. It just happened that I watched it and I jumped on it, and obviously it worked out pretty quickly. I had two big green candles. Anytime it's two big green candles, and there's the market closing. It's 4 o'clock, so I can finish up this video with this particular trade we took today, and let's look at the couple other stocks I liked that I missed. Okay, this was another one. It was these real estate REITs, investment style of portfolio stocks, were on fire today. And this did a similar move, did gap up. We're talking 259 to 282, which is pretty solid for a $2 stock. Just took off, consolidated. Now, this was the break right here. That's the consolidation, but stayed up. It didn't come back down. Like, a lot of times people talk about taking the breaks of the highs with the consolidation. The key here, for the way we look at it, is we don't want to see it come back down here, come back down here, come back down here, chop around, come back down here, and then go up. We want to see hold. Because once the SPY or the markets move up, it's already there. Once it's already there, it can break out, and boom, look at this move. We're talking, if we took the high of the day, 440, all the way up to 640, that's $2. So, I mean, end of the day, you got 666. And of course, what happens on a stock like this, it pulls all the way back. Guess where? To your initial breakout area. How about that? Isn't it funny how it works out sometimes? So, it's all about that first break. Some people like to take the second break as well. I don't necessarily like to do that. I think the first break is your move. Obviously, you could have taken the break of the 644 candle here, over here, but it's too risky. It's not worth it. It's already made its move. Now people are looking to sell off and move on. Let's see if I have one more for you guys. Yes, that last one we talking about IVR. Pretty good volume on here. Definitely in the first two candles here. Look at the crazy gap up from, we'll call it 295 to 371, almost $1, not quite there, 80 cents or so. But you definitely had that move up, a little consolidation, a little bit further down we would like on this one, but looks more because it's the price. But it is pretty far down on this candle, but it was only one candle, and it kind of dojied out and then consolidated here and then made its move. Now, you probably wouldn't have gone in on this candle because you want the high of the day, which is 447. But you would have gotten on this candle, okay? So this candle at 447 up to 508. That's 50, 60, 70 cents, depending on how you got out. You could have wrote it down. It would have come back down. If you moved your stop up to break even, you would have been stopped out. But notice how it didn't really come down to where your first stop should have been, which is sometimes below here. I probably would have made it below this candle here because this one's kind of stiff, and I'd rather be a little bit tighter. So it didn't, and then you had another chance to get out at 544 if you're willing to hold on to it. So another move up of 30 cents or so. So pretty good setup there. Overall, some good trading today if you were willing to make some moves. And let me know if you guys are making trades based on gaps and what you're looking at in the markets right now. It's a little difficult, obviously. Where we go from here, you just got to be tight and hold on to your cash. Cash is king, of course. And try to make some good trades out there. Don't go too heavy, and we'll see you in the next video. Have a good one. This is Rich with some price action, March 26, 2020, and have a good one.